Here we go, jumping into our Indianapolis market report. Sweet, what a layout. I love it.
I love this.
Mike, I'll let
Fancy,
you
man. It's super
Yeah.
fancy, this new software.
I know. Hopefully we're still in the free trial month, but we'll see.
Yeah, we got to talk fast because we only have a certain amount of time that we can do.
Exactly. Yes, we are on a time limit and go. What do you think? Indianapolis market. This is we all know, and if you've watched any of our other videos, this is an extremely popular investor market overall. Yep. Everyone wants to know what's going on. If you're in tune with these market reports, you're ahead of your average investor without a doubt. So what's going on? What's going on in the Indianapolis market?
Well, honestly, not much in a good way. Not a bad way. And if you read anything investing real estate now, especially right now, and specifically in single family, but also multifamily, there's a bunch of chatter out there about how the Midwest is doing much better than the rest of the nation, even the Sunbelt areas like Florida, Texas, Arizona, because it just continues to be steady. And those other areas, when they get hot, but when they cool down, man, they really cool down. And so it's the old tortoise and the hare. And here we are, Indianapolis. We're the tortoise. We just keep on going, keep plugging along. So honestly, there's nothing like earth shattering here, but it's just we're just plugging along. And it is down a little bit. So the average rents are down slightly year over year. But again, we think that's kind of part of that reset from kind of those all-time highs that we had last year.
Exactly.
So average rent $1,350. That is down 3% year over year, but up 3% month over month. So trending in the right direction. Active homes 2,080. That's actually a decrease in supply. We'll take a look at that here on the next slide, but that's heading in the right direction. And I think the biggest thing to talk about for Indy is average days on the market. This has been super volatile over the past 12 months. And look at that, it's heading significantly in the right direction. So it's down 3% year over year, down 20% month over month. So heading in the right direction. And again, this is, we're recording this in March, but these are February's numbers, which is typically either the worst or the second worst month to rent a house out in Indianapolis market just because of seasonality. It's just cold. Sometimes it's snowy. So to see 58 days on the market after what we had this past year is encouraging. I mean, 58 days is not fantastic by any stretch, but for February and with what we've had, I'm pretty pleased with 58 days on the market.
Yeah. I mean, I think it's a little bit of seasonality for sure. I mean, last month we saw 72 average days on the market. It's trending down. It's beginning to fall into its correction. People are starting to get realistic about their pricing.
Yeah.
So I do think it's starting to average out. And honestly, a lot of the average days on market, I'm beginning to take, as we follow more and more of these market reports month over month, I'm taking a little less stock in this average days on market. And I want to kind of keep that mindset as we go forward and see if it kind of correlates with what we're talking about. But the average days on market is also going to pertain to a lot of your sole investors out there that aren't under management, aren't decreasing their prices. They're holding strong at $200-$300 over market value. I mean, we deal with these people on a daily basis, and we have to educate them a lot of times. So those are really skewing the average days on market numbers, without a doubt. At least that's kind of my my hypothesis at this point.
Yeah, and the other thing is where we pull that data from, right? So we get that data from MyBoard database, and that is in Indy, there's a good amount, but as you get into some of these submarkets, it does tend to get a little bit less because not as many property management companies list their homes in MyBoard. We used to, for example, and now we don't anymore. And so, who's putting those in there? That is typically then your average realtor who may not be as focused on days on the market. This may be like a gig for them, kind of a side project. Like this is all we do every day, and like we're hyper focused on our days on the market. And so we're looking at that, and that's important to us. Whereas, if this is like, hey, will you list my home on the market or on the MLS? They maybe don't care if it goes vacant for 2 months or 3 months. So I don't know, just consider that as well, probably contributing to what might be a little bit higher days on the market than what we're experiencing.
And I'm so glad you mentioned that. And I'm gonna go into this a little bit further here, and I don't want to hold on to Indianapolis market too much, but this is very valuable information is a lot of the new investors that I'm talking to, and let's face it, I mean, there are a lot of new investors to this market, right? Every day there's new investors pouring into this market. And what I find that I'm constantly having to and I want to do this. I want to educate them on the front end that as they're acquiring a new property, it's important that they have all their pieces in place before they make a purchase or they acquire a property, because they need all the information. And we saw this the other day, Mike, where we know that a new investor picked up a property and the numbers that they were using to estimate the value of the property was from Zillow. And sometimes Zillow can be pretty accurate, right? But not always. And in fact, in this one case, that the Zillow was suggesting over $1,000 price difference on what would obviously be market rate. So they acquire the property hoping they're going to be able to achieve what Zillow estimates, and that's just not the case. So what I just want to make sure is important is that as you're beginning to acquire properties here in the Indianapolis area, that you have all of your team in place. You need to have a realtor who's familiar with the market, understands and can help you acquire the property, but you also need to be in conversation with a trusted and experienced property management company like us to help you run a rental analysis, set the right expectations before you're actually acquiring that property. Hopefully, if you have the right team, all that information can flow pretty quickly, but you need to have that team set up and then acquire your property. And the ones that I encourage to do that and that follow that recipe, they tend to be much more successful instead of just hoping that they can just do it on their own without having a somewhat of a team in place before they acquire property. So I just wanted to get that out.
No, I 100%. And Chris, it's a great real life story that happened this week, is that property where we ran the analysis, and it was literally, I think it was $1,200 difference than what really the market was. And it was, it's those homes down in, I forget if it was Broad Ripple or Meridian Kessler, where it can vary quite a bit. Zillow is a tool. It's a tool that we use, but it's not always right. And so it's important to get that professional with real market knowledge on there. We had that market knowledge because we had that place rented, and we had a days on the market and how long it took to rent before, all that kind of stuff. So yes, just to echo your point, it's so important to get that professional on your team.
Exactly. Yeah. Okay. Well, enough about that. Let's get back into the market reports. In another video, you can listen to us kind of ramble on about what you shouldn't do. But let's go over the numbers here. I'm gonna skip slides. Here we go.
Yeah. We just go back real quick. Let's just talk about average sales price again. I know I always harp on this, but got just so affordable. $231 is the average sales price. Again, if you're a new investor, that's a very attractive price point. Even in the Indy market or Indy Metro, I mean, you'll see as we get to Westfield, Fishers, and Noblesville, it's significantly more than that. So that's a very approachable price point from an investor's point of view. So 231 heading in the right direction, both year over year and month over month. Again, just the tortoise just slowly creeping up every single month. So and there's plenty of those. We had 730 of those sold the last month. And again, these are all home sales under 500,000. We cap it at that 500 just to look at it from the investor's point of view.
Exactly. Yeah. And just a little bit more on the Indianapolis market is the gentrification that's going on. It's been going on for years, but now it's starting to kind of take a turn where the gentrification is actually making a difference, in your street by street. And then I don't know if you heard, and I feel like maybe we mentioned this in the last podcast, but so stop me if I'm just regurgitating here, but the new Indy 11 stadium that's going in downtown. Did you hear about that?
I have heard about that. I don't think we talked about it, but I have heard about it.
So they've broken ground, and I have very limited information on this aside from it's going into the downtown area. I'm excited about it, and they have broken ground on it. So I can only imagine what that'll do to values, let alone the tours potential in the downtown.
Have you seen any of those renderings? It looks really cool.
It looks amazing. It looks so cool. I wish I had one here right now ready to share. I would share it right now. That would be cool.
Yeah, it looks super cool.
Yeah, it is. It is really cool. So,
I'll just go over these two briefly. We kind of already touched on them, but active homes on the market. So the top red line is 2024. Gosh, it's almost mirroring exactly what happened in 2023, like almost exactly. We have slightly more inventory than last year, but heading into February and a little sneak peek of March, looks like we're going to get a decrease just like we did last year. So, less supply is always a good thing. And then we touched on this last time, but you can see what we were talking about. If you haven't watched these before, last year was a wild ride for days on the market for Indianapolis, peaking in June, which is totally contrary to everything normal at 124 days. So that's why I was fairly excited to see it at 58 in February. So that's the good news. That's why I'm so excited for the days on the market in Indy.
Absolutely, and I expect this to be very similar. In fact, I know because we did a little bit of show prep here, so I know what's kind of coming up here on the next couple slides. But I mean, look, you like you said, last year was out of whack, and I feel like we're going to be able to report a little bit more accurate numbers on what it looks like kind of year over year. So it's going to be fun. It's going to be funny to kind of go over how we compare this year to last year's wild ride. Okay.